Hey, 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 happy Friday. Hang on, let me get things all set up here. I gotta get the chat room going. Un momento, por favor. Happy Friday, super happy Friday. Let me remind you that trading is risky, not appropriate for everyone.
Let me remind you that trading is risky, not appropriate for everyone.
Echo, 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 echo.
Not appropriate for everyone.
Echo, 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 echo. All right, fix that. Cool. So let me start again. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small. Stay humble, focus on the long term, and never risk money you cannot afford to lose. I'm not quite comfortable. Hi, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange trading firm, and I'm here to earn your loyalty and respect and share technical and fundamental analysis skills with you with the overriding goal of helping you become a success sooner than later. And when you find that success, when you decide to trade real money, perhaps you will choose Traders Way as your foreign exchange brokerage for your successful Forex trading business. So thank you very much if you are a client. Thank you very much for being here. Please remember to subscribe to the Forex.Today channel so that when I do these pop-up live webinars on YouTube, you will be notified. Or when I upload a recorded video to YouTube, you will also be notified. All right, just click on the little subscribe thing. Comments are always appreciated at the end if you're watching a non-live version. And of course, a like is always nice. It actually tells me if I'm covering the right type of information. So without further ado, let's jump into the technical and fundamental analysis. Now, I did want to share one thing on Ziopon. What is it? Where did it go? Hang on, I gotta find it. Where did it go? So that's there. Should be a browser window. Yeah, okay, this one. There we go. So we talked yesterday, fundamentally speaking, or geopolitical speaking, Australia was going through some political turmoil. They decided to shut the government down for a month or so and blah, 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 blah. So they got together in a closed door meeting and picked a new prime minister. Huh. What do you know about that? That's interesting, huh? 6 people or 10 people or 20 people, whoever, they got together and just picked somebody. So anyways, Australia's been saved. Yay! Will this lead to a stronger Australian dollar? Well, it doesn't have to, but political risk is one of those things that cannot possibly be good for the Australian dollar. So to get rid of that, to get rid of the uncertainty, certainly isn't a bad thing. Dan says he was a treasurer, so not much change in policy. Yeah, okay, cool, which is good. That's actually a good thing. So once again, the more there's less uncertainty, or the less uncertainty there is, the better that would be for a currency. Okay, it's the uncertainty that kills it. So if policy is just going to simply continue, well, that's less uncertainty. People they think they know what's going to happen next, and therefore they can make investment plans. So that's a good thing. It's when you don't know. All right. So anyways, what is it? The 6th prime minister in 11 years or something, which is amazing since there's only been 30. So every 2 years, Australia's been getting new prime ministers. There was a time, for example, is it 7th in 10 years? Okay. I mean, I've been doing this long enough where I've lived through most of those, right? And I remember things like the Australian economy was tanking. Most of the industries were collapsing, except for the mineral business in Australia. That was booming and keeping the rest of the economy afloat. So somebody thought it would be a good idea to jack up taxes 50% on that industry. Talk about shooting yourself in both feet. You're like, what are you talking about? So anyways, and that was the end of that Prime Minister's career. Thank you very much. All right, so let us get going. Happy Friday. I think I said it about 5 times. That's pretty cool. Today is also the first day of swing trading, so swing trading group will meet at 9:30. Okay? All right. So look at our plan. Now we got to go back in time. I know 3 weeks ago, 2 weeks ago, this week. Well, last week's plan was an inverse head and shoulders, and that came to fruition. Thank you last week. This week's plan was sort of the M2, weekly M2 to weekly M4, which is this big circle area, and we created this new channel, and we knew it would come up. We knew it would retrace. We looked at this area, this area, this area, this area, this area as being the possible role reversal. What used to be resistance could now be support. It's also a breakout retracement type thing into that role reversal area. I marked it with a gray zone, okay? So anyways, it came up, came down, went a little bit lower, but notice used the monthly pivot. And now is back up to here. And, you know, the theory is we're supposed to end today up in my little circle area. You know what? That ain't half bad. You know what I mean? Well, how do you get notified for these? You subscribe. Click the subscribe button. And there's a little bell thing that basically means if you want to be notified when new content is created, you'll get notified. So typically when I hit start, a second later, my cell phone goes bing because I was alerted. Go to the website. 9:30. Okay. So when you log in, I believe there's a webinar room already there. If it gets monkeyed up today, we'll iron out the wrinkles. All right. So anyways, you see the price action now, guys? Down, right? Lower high, lower low, higher high, higher low, higher high, higher low, higher high, higher low, and hopefully, maybe, end the week higher high. I should also preface this once again. We counted on this period to be a potential reversal period 8 months ago. Isn't that interesting? Janet says this notification on YouTube doesn't work, but how did everyone know that I started the webinar? And so it must have worked for somebody. All right. USD Kitty CAD. You can see our target for the week was here. Under these rules of engagement, it's very likely to countertrend. And when it countertrends, it's likely to countertrend back to the central pivot, which is this black line. And it did that. Now, the third thought here is you would want the trend to continue, and USD CAD could plausibly keep falling to the next level. That's terrible, Janet. So when you subscribe, the next thing is it says is the little bell thing. You have to turn the little bell thing on. Also, I'm assuming you have your email or your cell phone registered with YouTube as well. Gee whiz. Got another cold from somewhere, like the nasal cold, completely different. I don't know where I'm getting all this stuff, but it's amazing when you have lots of kids. When you get surrounded by lots of kids, you get sick. Anyways. So that's the theory now, down, 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 up, up. Now, if you are a bull and you believe this is a significant reversal, then you want to play the higher high, higher low, higher high, higher low roll reversal kind of thing. You would use this area as support. Okay? But I think some people are using this to front run next week's move. Okay? That's a whole different thing. WTI. Once again, just following up on old trends. There's nothing new to add here. Oops. We had it coming down to either this level and then up, or this level. Plan A, long, or Plan B, long. Plan B worked out tickety-boo. It's a support. It's weekly support. It's monthly support. So you got the price action and market support. And what happened here? Well, it started with bears getting out, then bulls getting in, right? So now you get the lower low, lower high, higher low, higher high, higher low, higher high, higher low, boom. Now here's the thing. According to swing trading theory, this is your long. This is where you're supposed to buy, very, very clearly, non-debatable. That's a buy zone for bulls, and the target is this red zone. So we've actually nailed it. Now the wild thing is, we talked about it up in here, that it would either break out and move up here, or break out and move up here. So, you know, that's a week and a half before it happened, right? And then there it is, actually fulfilling its destiny. Could it go a little further? Sure. Oops. Add some more daylight here. Yeah, once we get beyond this area, it's a pretty big game changer. The monthly target, like the best case scenario, is only getting to here, which is, we'll call it 72. Okay, 72 is the most we could expect under these circumstances. Now, it'll have to be up to macroeconomics and other things to break us above 72, and if we do, that's going to be a big deal. The true risk here is that 72 holds. Okay? That it triple tops and basically creates a head and shoulders. Even if it doesn't create a head and shoulders, you'd be a fool to put money in the market here to go long. I mean, I believe bears will sell that. I mean, that's a great place to sell as a bear. But what I was trying to say is, if you were down here and you're a bull and you were aggressive, you drove it all the way up into here, that's all fine and dandy. But if you do not take your profit here, you are not disciplined. Because at that point, at best, it's 50-50 whether it goes up or down. So you'd be foolish. You'd be ignoring the risk. You'd be hoping. You'd be betting. You'd be praying. None of these things are good to a professional trader. Okay? So if you bought here, I'd say take half your profit here, take the other profit here, and then let the market do the hard work. So another way of looking at it is, your job isn't to outsmart the market. Your job is to figure out the market. And I don't think the market knows what it wants to do up here. So you should take a profit and let them fight it out. Now, I think I would like it to go up, but maybe the world's not ready for $80 a barrel oil. Maybe we just go from 72 to 62 to 72 to 62 indefinitely. Or like I say, it'll do that for absolutely forever and ever and ever and ever and ever until it stops. Okay. So what does that mean? Well, if we have decent demand for oil, if it's a demand side issue, if we have decent demand for oil, that means factories are getting orders. Why are they getting orders? Well, the economy is doing good, and so the economies that are working need natural resources for products. They need energy to keep the factories running and all that kind of stuff. So just think of it like in the United States. If you have money and you're confident in your job and you expect to have your decent job for quite some time, you've been saving money for the last several years, paying down your debt. Right now, the savings rate in the United States is something like 6.25%. It used to be negative. So Americans have paid down their debt and they've been doing some savings. But now if they feel really good with their job and that they'll have their job for a while, and they're in a better financial situation than 10 years ago, then what happens is they might start buying stuff on Amazon, right? And then Amazon gets those orders and they sell the inventory. So the factories in China that made all the stuff on Amazon, they get new orders to build new stuff. So they're going to need, PPI type stuff, the input to make these products, whether it's steel and plastic and all that kind of stuff. But then now, right, in those factories, they're going to need employees, they're going to need energy, to power the lights, to power the machinery, all that kind of stuff, right? But here in the United States, also the products need to be shipped by FedEx, UPS, United States Postal Service, and all that kind of stuff. So that gets all shipped off, and therefore those vehicles need energy. Those employees need to get paid, and so on and so forth. And a lot of economic activity can happen if Americans in that situation don't feel confident in their jobs, or don't have money, or didn't save, and they're broke. Then they don't order stuff from Amazon. There's nothing to be delivered by UPS man, and there's the factories slow down in China, and so on and so forth, and it's negative. And if the factories are moving at 60% capacity, because they're only working 12 to 14 hour days, not 24 hours a day, then they need less energy, and WTI comes down. So oil prices going up is actually a pretty good thing. Also, we still have many economies around the world that are trying to create inflation. Okay? And it was very unfortunate, but I guess probably not totally impossible to understand. But there was a time when the ECB said, you know what? We'll do what America has done. Because they did the opposite for the longest time, right? They said, we're going to jack up taxes and cut everyone's benefits. And guess what? It harmed the economy. Really? Yeah, of course it harmed the economy. So anyways, the European did their socialist pig dog stuff for a few years. That didn't work, and America recovered. So they're like, oh, well, maybe we'll do this whole American, buy our own bonds, monetize our debt, pump free money into the market. That should create inflation, right? It didn't. And it's not necessarily the European Central Bank's fault. They were just like 3-4 years late. What happened at the exact same time the ECB started buying its own bonds, aka quantitative easing, oil prices fell significantly by like 50%. Well, oil prices heavily impact the inflation level of economies. So the ECB spent a couple of trillion euros to create inflation, at the same time had massive deflationary pressures, and they didn't get anything. For their trillions of euros, they didn't get anything. So, oil prices going up would be inflationary. Suddenly, you'd get inflation in the Eurozone. So maybe the ECB needs this to go up. Who knows? But there's a lot going on when you read the oil, right? There's more than just oil prices. It's actually like a gauge for the entire global macroeconomic situation. Okay. All right. Pound dollar went down to our monthly target. So remember, our projected low for the month of August. I can't even read that. What is it? Can anyone read that? 127, basically. 127 and some change. 127.50 was our projected low. Yeah, it went down another 50 pips lower, but then very quickly moved its way back up. By the way, this is a beautiful swing trade long, and the target was right here. And in fact, that set up a counter trend trade, right? Under these circumstances, if you buy it here, you're predicting here. That's what we drew this X on Monday. Well, by Tuesday, you already hit the target. So in that case, you're supposed to take profit as a bull. And then bears have permission, if they want to counter trend. Right? And counter trend it did. Boom. Nice. Back into the roll reversal. Right? Boom, 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 boom. Again, we drew this. When we were up here, we drew this gray area. Came down. So now, I don't really know what's going to happen here. Okay? So you can see there's plan A and plan B. Both needed the pound dollar to fall. And that's crazy, right? Oh, you made 100 pips on this yesterday? Right on. Well, this part was interesting because even if you're a bull, you wanted it to fall so you could buy it low. That's what bulls do. They buy it low. They buy the dip. Well, you need a dip. And you can't buy up here. You'd be a fool, just an absolute fool to be buying this up here. So you needed it to come down so you could buy it down here. But so that's what bulls want. Well, bears also want it to fall because they want to sell it. And they're trading the bigger move, right? Lower low, lower high, lower low. So on a daily, this is an hourly. On a daily, this is a great sell zone, and that's why we have this mark. So now what happens? Now I don't know what happens. If bulls want this to go long, if we want to be way up here next week, then they need to consider this as their buy zone. And if, of course, that isn't, plan B would be here. Now, bears, this is their entry anyways, and now their second opportunity to add to that position, their first opportunity to add to the position would be this, and you get this down to here, and then probably here, and then here, okay? So we drew this days ago where even though we're up here, it should come down regardless of a bull or a bear. And now what we don't know is if bulls buy it up, great. If bears sell it hard here, ooh, okay? So this is definitely, definitely, definitely a sell zone. If you were a bull, you should have bought it down here. Now what bulls are really hoping for is it comes down a bit, and then you have a second chance. Okay? Okay? Jow made 100 pips on that yesterday. Right on, man. Any questions? By the way, if I'm covering the right information, if I'm going at the right pace, all that kind of stuff, if you're benefiting from this, can you do the whole thumbs up thing? Only 1 out of 3 people have given the thumbs up. Just let me know that I'm doing the right thing. We're going to zip over and start doing yen pairs now, if that's okay. Okay, no questions? All right. You know what? Let me do gold. Did oil, did gold. We drew this up yesterday on the YouTube webinar, and I said this would be not a good one to trade because, you know, bears were supposed to sell it up here, but bulls were going to buy here. Remember we talked about fib wars? I have the fib going up, which is this cluster here, but the fib going down, which is this cluster here. And I said it's, you know, it's more bearish than bullish, but probably riskier than recent opportunities. Am I drinking tea? No, I have black drip coffee here, and then I have espresso here. A macchiato. Okay. Maybe some thoughts on euro. Yeah, I guess we missed this one, right? We have this set up like an inverse head and shoulders. It's not really one, but that's how I have it set up here. Very similar to the other thing, whatever it was that we just covered, where you know, you want it to fall so you can buy it. Isn't there like a Pixar movie that talks about stuff like that. To turn left, you steer right, something like that. So if you're a bull, you want this to fall. Yeah, if you're bullish, you want prices to decline so you can buy it. Very counterintuitive, I think. But nonetheless, going in here, this is hardcore resistance. So even if you, right, either way, it needs to come down. Bears need to sell it or bulls need to take some profit. And that's typically what happens if this moves up to the next level. The only thing that really truly happened is the bulls took profit here and then re-entered. And they would have looked at it like from through this lens. Troy says it was cars. Right on, Troy. But a lot less clear, right? But yeah, if you're a bull, that's fine. I don't like the velocity on this one, to be honest with you. There was an opportunity to trade it as a weekly swing trader, but you blew the doors off that profit. I mean, you would have bought it Monday and already hit your target on Monday, which is incredibly rare. Here's an example of you might have been looking for a counter trend trade, just didn't even get it. Maybe at best you sold this and you had it for a bit and then it just went off to the next level. And this is just tricky, man. These are tricky things. So you have to make some pretty big decisions here. Are you a bull on this? Is it going up now for the rest of the year or not? Remember, my hypotheses for last week was this would be the turning point for the rest of the year. Now, I told you that in January. So the fact that we're down here and then suddenly we're way up here, is this technically important to you? Is this fundamentally important to you? I don't know where I got so sick again. Sorry for the nose wiping. Okay, but anyways, this could be very, very, very important. You might look back and see us up here. You know, we might be on our way to 135. You're like, 135, Wayne? Yeah, well, you should have bought it at 112, huh? Okay. Well, so therefore you need to isolate the euro and discern whether it's euro strength or is it everything else weakness. Euro Aussie is straight up, Euro Kiwi straight up. Now they're kind of the same, right? They're cousins, right? But nonetheless, it does look like euro strength. And is it plausible it's because oil went up? And like I'm trying to say, it plausibly is. Euro Kiwi has already hit the target. So remember, I kind of expressed that you had a beautiful buy here early in the month, hit the target in the middle of the month, had the counter trend in here after that. And, you know, we played this out that you almost like to leave it for a while. It's kind of like farming, right? Let it just grow wild for a period in time. Pick it up later. Like, what more would you expect from this currency pair? Chuck says Powell's Jackson Hole speech later could be a market mover. Absolutely. Yeah, absolutely. So the whole market's waiting for that. But, you know, again, we talked about that on Monday, right? So, yeah, let him come out. I think that's at 10 a.m. and let him do his thing. Shouldn't matter, you know, if you're a medium-term trader like a swing trader and stuff, it shouldn't matter that much. As a scalper, yeah, it might help you, it might hinder you. All right, let's go to the yen pairs. Okay. So how did I do on this one so far on price action? Remember, all of this was a guess. So you say, well, Wayne, it actually didn't come down to the role reversal. It only a little bit came down and then went up. All right, all right. You didn't get a solid right shoulder or double bottom or whatever. It double bottomed to triple bottom before moving. But here's the logic: lower low, lower high, double bottom, higher high, higher low, higher high. The question that I asked you guys last week, was if this were to reverse, what would it look like? That's the whole thing. So this is all a guesstimate, what I drew in the orange lines. If it were to double bottom, then how would it do it based on price action, rules of price action, right? That's pretty reasonable. Now we're into, I guess the unpredictable part was this was an easy sell, absolutely perfect sell back on the 1st of August. Well, the projected low was here, and we just blew the doors off that. So what is this, S3? It's not typical. You're not typically looking for double bottoms on S3 because you're not typically at S3. So now in September, we're going to have very wide pivots. And so I'd almost suggest an inside week. Although I'm hoping September is a big month. When the pivots are, when you have such an unusual pivot month, the next month is going to be unusually wide, which is probably not going to be very accurate. So therefore, instead of going for the upper target or lower target, you'd probably go from, S1, which is down here, or R1 up in here. And I call that an inside month. You're doing the S and R, not M1, M3 type stuff. Okay. And again, please ask questions if I'm losing you from time to time. Okay. Again, only half the people have given a like. Would you please give a like? I mean, that's it. All you have to do is go like, and it's done. Not even a second. It's important to YouTube. All right. So that's that yen. That's moving fine. Here's our kitty CAD yen. This one took a long time. It was quite slow to move, which means CAD is not as strong as it could be. Because we know yen is, relatively weak. Would you average monthly? Well, again, I would just use R1 and S1 as your guide targets. Okay? That's all I would do, Raymond. Okay. So we're supposed to be higher than we are, and I wouldn't say this is trending well. So you'd have to trade this one quite conservatively, I think. Okay. Notice that the easy trade, if there was one, has already completed its destiny, right? On the first day of the month, bears would have sold this. It's absolutely perfect sell. You should know this. If you don't see why that would have been a perfect sell on the first day, then you are missing knowledge. But that's clearly, like, I look at it like, oh my God, obviously, right? And what's the target? That's the target. Okay, so all we've been left with is sort of a mediocre counter trend trade from this, and even that's fulfilled because the counter trend trade target is the central pivot, but we did that too. So like now this sort of floundering here, like cut it some slack. Like what else would you expect in this situation, right? Like it's done everything it was supposed to do for you. You were supposed to sell it, take your profit, counter trend it back to here, take your profit, and now what? Now what? You wore it out. Right? You just wore it out. It's tired, man. It doesn't want to do it. Give it a week. Let it just grow naturally. Kiwi. Okay, once again, perfect sell. Here's the target. Went a little bit lower, but if you are looking for double bottoms, remember this is the week we expected back in January that this would possibly be reversal week. So you might be looking for a reversal here. But then look at the higher high, higher low stuff. This is the buy zone in here for bulls. I have it marked in gray. And I'll even zip in a little bit. So double bottom, higher high, higher low. Here's your swing buy. And the target for that is here in the red zone. So we've nailed all of that. The question is if traders were front running for next week. But the bulls are looking at it this way, right? Lower low, lower high, double bottom, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Okay. Does that make sense? You should be using price action. Remember, pivots are market. So you should be using price action, and the market dictates where profits are taken. Okay. This is Swiss yen. This was a clear sell. There's the top profit target. This is the projected low for the month of August. So once again, within a pip or two or three of the top, and within a pip or two or three of the bottom, completely fulfilled its destiny. And then just a crazy stop and reverse. And off we go. So Swiss franc is very strong. And they're not going to like that. That really hurts the Swiss economy. But what occurred earlier in the week is an official from the Swiss National Bank indicated that they are not going to change their policy for the next few years. Actually, I think he said next couple of years. And the market apparently didn't like it. So strong Swissy, bad for Switzerland. So put it this way. You decide you want to go skiing in Europe this summer, or this winter. You're going to take your spouse and your children. It's going to be expensive, right? The four of you are going to go skiing in Europe? Yeah, it's going to be expensive. So there are two towns on the border, just slightly, a couple of kilometers each off of the border between France and Switzerland, in the mountains, right? So on one side of the border, there's in the French Alps, cutest little town you've ever seen. You could stay there, or you can go 2 kilometers away, cross the border onto the Swiss side, stay on the Swiss little town, also the cutest little town you've ever seen. The only thing is if you stay on the Swiss side, it's going to be 100% more money. They're both the cutest little villages. They're both on the same mountain, but there's a political border between the two, and different currencies are used in each one of these little towns. So you're like, well, if we're comparing apples to apples, the town on the French Alps side is going to be half price. So might as well do that one. And that's why a strong currency hurts Switzerland, because now we're not talking about just an Airbnb, Swiss chalet here. Rolexes get expensive. Cuckoo clocks get expensive. Chocolate gets expensive. Illegally hiding, tax evasion gets expensive because you got to bribe a bunch of Swiss bankers. Chocolate, right? Chocolate for crying out loud. So anyways, it's interesting because I don't know if you know this about Switzerland, but it's completely surrounded by Europe, and it does a lot of trading with Europe. So when a European looks at doing business in Switzerland and says, oh my gosh, I have to pay twice as much to work with the Swiss? Yeah, might as well just work with the German, right? Go find yourself an Austrian. All right. So it makes you wonder if German watches. Germany makes some really nice watches. Most people think Switzerland, but you might get a better deal now on the German side. All right. Let's do Aussie. I'm going to change this up. Okay. This gray zone, the bottom of the gray zone is the projected low for the month of August. We knew that even before. We talked about this in January. This is the projected low. So all of a sudden, higher high, higher low, higher high, higher low, right? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Using price action as your major tool of entry, once you know you have the higher high, you find your old low, sorry, your old high. Your old high is here. You drag that across, that's your new entry. Once you make a new higher high, you look at your old highs, right? And you make that as your potential entry. And then when you make your new higher high, you look at your old high, mark that as your new possible entry. Okay. Now notice, even though this collapse of a double top, pivot cluster and all that kind of stuff, you drag that old area, and this worked just as well. Okay. And once you find yourself up here, let's say if we make up to the red zone, that would be a new higher high. So you got to look left, grab your old high, drag that across. And so if the future stays bullish, you're going to get a scenario something like this. I mean, we don't know, but I'm just explaining what you would expect using price action. Okay, does that make sense? $200 EMA is taking the head of the. So I look at that and it's just neutral. I'm not even looking at the moving averages. They're dead. Okay. They die basically here. So I'm assuming now everyone understands the price action. Up, 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 like the way that I did that. New higher high, drag the old. New higher high, drag the old. New higher high, drag the old. That's all basic stuff. No questions about that. Okay. Cool. You guys are good. So we did cherry bomb already. We did that one. I tend to skip USD Swiss franc. Or, I mean, USD yen. Yeah, I don't like trading these against each other. So I think I'll just pass. Been at this price for a while. I'm 111. Yeah, Wayne at fxbootcamp.com. Okay, Johnny? All right, so we did all the yen pairs. We did most of the dollar pairs. We did gold and oil. This is your last opportunity to make a request. Let me know what you would like me to cover for you. Once again, if you'd be so kind, would you give a little thumbs up so that YouTube knows that this is good stuff? Yeah, okay, so question here is, how do you pick a currency pair to become an expert in? I wrote a whole chapter about that in my book. It's called The Greenback Guru. I suggest that you become a specialist in any one currency, because you can't just be a jack of all trades. You have to be a specialist. That's why investors pay you money, because you're a specialist, right? I chose the US dollar because it's the reserve currency. That's the unique part of the US dollar. Something that the Aussie dollar isn't, or the Canadian dollar isn't, or the Japanese yen, okay? So it's sort of, it's extra special. So you could choose the dollar, but really, anything you want to specialize in. So let's say you happen to live in Australia, then that would be a great one to specialize in. First of all, you have boots on the ground, so you really know what's going on politically and economically and all that kind of stuff. And the RBA media minutes are released at a good time for you because you're awake. For a lot of people, RBA media minutes come out and they're asleep because they're in Europe. Okay, so it doesn't really matter, but I would pick one of the majors. I would specialize in it. Like, for example, if you're going to pick a yen, the downside with that is much of the information, not all, but much of the information released by the Bank of Japan is in Japanese. Makes it a little more difficult. Now, I've surfed through their website and found information. Some of it was in Japanese, but I could read the Excel spreadsheets. But it might just be easier to pick a language you speak, right? Or a location that you visit a lot or live in. But again, the US dollar is a reserve currency, so that's a great one to start with. Okay, Alvin? How reliable do you think the Swissy yen reversal in progress? I don't typically trade Swissy versus yen. It just happens to be trading well right now, but that's not something sort of like the USD yen, right? So Swiss franc tends to be a funding currency. When things go bad, people tend to buy the Swiss franc. They want to move their money to Switzerland. But they also like to buy JGBs and they like to buy US Treasuries. So typically you can see, let's say not even typically, often what you can see is dollar, Swissy, and yen are all doing the same thing for the same reason. So therefore, I wouldn't want to trade USD Swiss franc, USD yen, Swiss franc yen, so on and so forth. So I'd kind of just tiptoe around that. Or you look at it, just say, it's trading technically so well right now, I'm just going to play it until the technical trend runs up. My email box? Well, the problem is I get so much email, John, that if you don't hear back from me in 24 hours, you're not going to hear back. So you might as well email me again. Yeah, am I planning to come back to South Africa? It's been a couple of years now, right? I like South Africa. I'd like to visit Cape Town this time. One of the ideas that we were throwing around maybe a year and a half ago was for me to do a pretty detailed, let's say 4 or 5 day workshop on how to start, manage, and promote your foreign exchange trading firm, aka hedge fund. And the cool thing, so we talked about doing that in Cape Town because, it's cheap because of the South African rand. You can be at a beach more beautiful than what you can find in California, right? And stay at a beautiful 5-star hotel. And relative to other currencies in the world, it's cheap. You're like, what? So we even looked at getting helicopters to fly out to wineries and stuff, and it's all good. So that was one thought. That sounds like a lot of fun to me. But I am super unbelievably busy this semester. I have 4 classes that I'm doing at Harvard. So like I'm flying to Napa Valley coming up soon, and then I'm flying to Cambridge, and then I'm flying to Cambridge, and then I'm flying to Cambridge. It's just like, what, yep, and when am I getting, right? I don't have free time. Okay. Any other questions, guys? Currency pairs. I just threw out, maybe we can do nat gas. So you can see nat gas, absolutely perfect, straightforward swing trade. Hit the target and stopped. But the odd part is this is supposed to be falling, not rising, based on typical correlations, or it's predicting a reversal. But I don't know. One of them's going the wrong way. Oh, the peso. I want to skip the peso because it's the 24th of August and you're too early. Now you might say, well, technically, Wayne, blah, blah, blah. I don't trade it technically. Right? I don't trade peso technically. I use one particular strategy on it, and it's more of a calendar based. It's based on flow, on money flow. So I just do that one flow trade and then kind of ignore it otherwise. What books should you read? Well, you can get my book. It's about 10 years old now, but I did a decent job, I thought. The Wealth of Nations. I've read the first edition at Harvard, which is really, really cool. Do you need to understand the butcher, the baker, and the brewer? No. Just as much as you don't need to know the butcher, the baker, and the candlestick maker. Or Run DMC. None of that is required. So what would be good? Another book besides that. I haven't really read many books or any books really, because when I first started trading, there were no books, and most people have heard the story where I had to go to Stanford University to look for books, and Amazon was a tiny little online bookstore. It was a brand new little startup, and it didn't have any books. And Barnes and Nobles didn't have books, so then I went to the university and couldn't find any books there. So I'm completely self-taught. So I've been trading longer than most Forex book authors have been trading. So I don't really have any recommendations there. I do free webinars every single day, and I've been doing that for almost 15 years. You can hang with me every single day for free. Just visit tradersway.com and open up a trading account. Join the family. Do I think Euro USD will reverse? Well, first of all, why would it reverse? Because of the Powell meeting? And then reverse time defined by what? On a daily chart? No. Are you in a short-term trade and on the 15-minute chart you're worried about a reversal? Yeah, okay, yeah, you're going to face some vulnerability because we know we have risk coming up, right? It's an event. Oh, cool. Right on. So you already got your Traders Way account. Cool. Right on. So give it time. If you have money, you can take the fundamentals course at Traders Way, at FX Bootcamp. Okay. So anyways, is this a good setup here? Well, we've blown through the weekly and the monthlies. So what are you going to use for technical analysis? Like I'd look at the weeklies, and the weekly, they're not going to be helpful to you anymore. And the monthlies, I don't think these monthlies are very helpful at all anymore. So you might as well even just get rid of them, right? So now what are you going to use for your analysis is going to be the question, right? Okay. Is this a good place to buy? Well, let's just follow where we are now. Okay. Is that going to act as support or as resistance? Probably more of resistance than support, right? So you got to let it play out. So ideally, you get a breakout, a pullback, and then you enter, right? Where's the next level of resistance? Sort of in here. Okay. That's that. Now, if you were zoomed in, you were probably going to play that 4-hour 21, right? So watch this. I'll mark this just a little bit like this. There it is, right? So you would have been buying this, but you know, honestly, it's not something you should be doing now because you're about, I don't know, 8 hours late. If I email you, well, I'm busy today, John, for the next few hours, but I don't know, you in panic mode, John? Put it this way, John, if I don't respond to you today, email me again on Monday. Because by Monday, your email would have been buried under hundreds of emails. So just do it again. And and I'll do my best to get back to you. So, okay, Ross says, I'm looking to understand more about the nitty-gritty study in past economic reports. Well, yes, for sure. Okay, but then on top of that, I mean, those are just news events, right? So, like, what do I cover in the fundamentals course, right? I start with covering what money is, right? The unit of measurement, the store of value, and a medium of exchange, right? We kind of go through all of that, and then we go into the fractional banking system, and then I teach you how to manage the balance sheet of a commercial bank so that you can understand basic banking economics. And then I teach you about what a central bank is, what the Fed is specifically, what a central bank is, the difference between the discount rate, the Fed funds rate, the prime rate, for example, and then what a central banker does to manipulate the economy through their central banking policy, and specifically through the money multiplier formula, how they create or destroy liquidity and what that would do potentially for the economy. So before you start studying like CPI, PPI, GDP, you should really understand what all that other stuff is, because GDP is just GDP. I mean, you should know the formula and all that kind of stuff, but if you don't get it, then just another number is just another number. But if you understand how a central banker would look at it and say, oh, we need to, did you see GDP and CPI and PPI? We don't like those numbers. We're going to have to do something to help the economy. So therefore, we're going to make a change, and we're going to go in through open market operations, or OMOs, right? So you should be able to say to me, oh, the central bank's just going to OMO this and, drive down liquidity and do this other thing, blah, 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 blah. You should be able to articulate that very, very clearly. And that's the kind of stuff that we go through in the fundamentals course, so that I don't think I even cover CPI, because CPI, you probably know the basics. It's a basket of goods. Do you need to know the mathematics between the mathematical difference between CPI and PCE? Well, that's the stuff I study at Harvard, and the difference in math and all that kind of stuff. Is that required? No. But what's 10,000 times more important is the Fed is going to do something. And when they do something, it's going to have a particular effect on the economy and the currency, right? So that's where I take you in that fundamentals course. Does that make sense? Cool. So news, I tell people, is just news. News is not fundamental analysis. News, like PCE coming out, is for event-driven strategies. So a lot of people like to scalp the news. But that's not fundamental analysis. That's just high volatility event-driven strategy. But fundamentals help me decide on trends 6-7 months in advance. And people that have been following me for years and years and years know that I can casually talk about what I'm going to do 6 months from now. And gosh darn it, very often, something reasonably similar to what I talk about tends to happen. Why? Not because of the news, but because of fundamentals. I spilled my macchiato. Oh my gosh. The wife's going to kill me. Which book? No, I'm talking about the fundamentals course at FX Bootcamp. No, my book, Strategic and Tactical Forex Trading, I wrote 10 years ago or something. It's good. It's good. I mean, it's sort of a cover-all kind of thing. Yeah, the fundamentals course, I'm guessing, is probably, I don't know, 20 hours worth of material. All right, any other questions? I think we're done. I think that's it. It's been a Friday. Thank you for the likes. So yeah, I'll see you Monday. If you're new to these webinars, please visit tradersway.com, open up a demo account. You can attend my daily webinars for free at Forex.Today, all that kind of stuff. Opening a demo takes like 30 seconds. It's all good, probably even less than that. That's that. Have a wonderful weekend. Remember to review your charts and plan your trades. And swing traders, we're going to get together in an hour and plan out next week's trades. We'll do that today, and we'll be looking for trades that are 100, 150 pips. And then next week's meeting, we'll look for trades that will be 300 pips. So thank you, everyone. I appreciate the loyalty and respect you show me every day. You keep me really excited about the markets and sharing, because if I have to share, I kind of have to think. And I enjoy thinking. I often ask myself, why do I believe this? Why do I think this way? Why do I know? What if I'm wrong? All this stuff is, I think, the healthy, right questions to be asking. And I learned very early on in my career that trading alone is a very difficult thing. So that's why I started coaching, 1,000 years ago. And I've never regretted it. Absolutely never regretted it. So thank you. You make me want to be a better trader. Where do I log in 1 hour? The website, fxbootcamp.com, the site where you went and signed up and paid money. That would be it. Okay. Yeah. Namaste. I'll see if there's time for me to grab everyone's email and email you, just so you know. But anyways, thank you again, guys. Yeah, and if you have questions, Wayne at fxbootcamp.com. I can't promise I'll respond to everyone, but if I can, I will. Sharp, sharp.